Hello, it's Tuesday the 26th. I'm FxPlew and this is the market brief. So the UK may be facing another wasted year. We've had marginal growth, inflation remains elevated, and by the end of the year we can probably expect yet another reset from Starmer and Reeves, because where Nigel Farage is waiting in the wings, comfortably ahead in the opinion polls, Starmer's leadership needs to pull its finger out fairly sharpish. A year ago, voters were promised a new style of government where they elected Labour, one that would be honest with voters and would work with them to help improve living standards after those years and years of Tory mismanagement. Yes, they did make an awful lot about that £20 billion black hole of unfunded commitments that they tripped over when they took over the Treasury. And yes, Reeves has managed to double that, as she stuck to her mantra that day-to-day expenses should be covered by day-to-day income. And where public sector borrowing continues to skyrocket, we're already bracing ourselves for the autumn budget. But the government does still have a large majority and still does have time to drive forward with its agenda, but this will be against a backdrop where the economy is faltering. Growth has been hard to find and inflation is unlikely to fall anywhere near the 2% target before the year end, so there is still a case for interest rates to be maintained close to their current level of 4% well into 2026. Over in the US, Powell used his final Jackson hole of his tenure to hint at possible rate cuts in September. However, divisions inside the Fed, political pressure and sticky inflation leave the outlook really rather uncertain. They face a dual challenge. Inflation is running way over the 2% target, and that is coupled with a softer labour market. Tariffs have driven some prices higher already, and PCE and CPI data, both due out shortly, are both expected to show inflation is stuck well over the 3% level. Powell described this as a challenging situation, acknowledging that the risks are pulling in opposite directions. Regardless of what Trump may want, the Fed can't really cut rates as aggressively as the ECB, as this would likely stoke inflation and cause them further issues further down the line. In the markets, the dollar sold off on Powell's chatter. The dollar index dropped to about 97.55, but that did recover well yesterday and closed around 98.45 on the day. We kick off this morning around 134.60 against the dollar, about 115.75 against the euro, and euro dollar is around 116.25 on the open this morning. That's it from me. Crack on and enjoy the shorter week. Toodaloo.
If you do not have a clue, then just tweet through and ask FxPlew.